Hi everyone, welcome to this first live event through YouTube Live. Hope everyone is seeing us. Hope you can join us, and hope you can join this event with FXStreet.com. We are here to cover some minor data, but besides that being minor, it's pretty relevant considering latest dollar strength, right? We are going to hear about employment figures in the United States. The ADP is a private survey, in fact, but it has been for past years considered an anticipation of whatever the payrolls could bring on Friday, right? So that's the relevance of the report. And considering that the dollar is trading at year highs, or in fact multi-year highs today against the green or the Japanese yen, yeah. Hi Mauricio, how are you? I can hear you.
Sorry, I think you have an echo, so maybe you have the other screen. The volume is high, I think.
Okay, I will turn the volume lower. Give me a second. There? There is better? Can you hear me better? It's okay?
I think it's okay now.
Okay, better? Okay. Anyway, I was saying about the relevance of the ADP number that we are going to hear in about 15 minutes. And well, pretty much that's it, right? I was saying the greenback is trading, sorry, at year highs, multi-year highs against the euro, against the yen, and we have pound close to the year low. The fact is that Aussie is also near its year low. I believe we have the Bank of England interest rate decision also in a couple of hours. Bank of Canada, sorry, not England. So that's maybe the reason why the dollar CAD is stuck around 113.80 as it has been for most of the last session. Anyway, and starting with the euro dollar, the fact is that pair has broke today below this strong floor it had set with a low in November and a low yesterday, and it has breakthrough today, and we are trading at fresh record lows. So for the year, so there are some sort of term support, sorry, in the 2320 area. In fact, I have comment about this in my reports from USA. But the fact is that I do expect further slides, right? I was not actually thinking the pair could lose this much ground, could lose the low ahead of ECB. Okay, we have ECB coming on tomorrow, and I believe that the ECB will be a big disappointment for the one expecting an announcement of quantitative easing. Maybe they can extend their plans, their current plans, but the fact is that the poor PMI readers we have today in the service sector and the poor ones we have yesterday in the manufacturing one, adding to the inflation in the euro area being at 0.3% is the main reason why the pair finally capitulated and broke lower. Anyway, my take is that if we break below 2320, which is today's low, we have further room to fall from around 50 pips, 20 to 70 price zone. This next strong static support area and a long-term one, so we may probably reach that level. But I could expect the rallies to remain contained ahead of ECB tomorrow. Whatever happens with the European Central Bank, I believe that it will be temporal, meaning if somehow the ECB does not introduce new measures or, I don't know, made a hawkish than expected announcement, the euro dollar may bounce, right? But the bottom line is I don't believe that it could turn the dominant bearish trend all over, right? It will prevail. The fact is that at this point the pair at least needs to recover about 2440 to say the least, to begin to feel some relief, right? And it has to move well above the mid-25, right, around this area to begin considering a reversal underway. And I don't see the case for that coming on, particularly because of the imbalance between central banks. You know, guys, we have one out of quantitative easing and the other still discussing if it's going to apply it. So that strong imbalance, it's been notorious all across the board. That's also the main reason why the Japanese yen is nearing 120, right? The surprising stimulus the Bank of Japan introduced on October 31st, yeah, 31st, was that catapulted the pair higher, right? Once again, United States ended its stimulus, and Japan is still introducing them. Anyway, and in here, since we have said something about dollar Japanese yen, there's some sort of static resistance level around 1960, 65. So that's the main bullish target in the short term. I know that we're expecting more action coming from this pair, and ADP can provide some, at least short term. But usually in this first week of the month, the Japanese yen enters in a sort of wait and see mode, as you can see in the chart. We have been more than a day already trading in a very tight 50 pips range, and that's because the pair is waiting for payrolls, right? We need a really good payroll on Friday to see it waking up to the upside, or a really bad one to see it pulling back lower. Still, in considering the latest price action, the 1720 level seems 17 price zone, I would say, 117. It's sort of a line in the sand for the pair, right? Down to this level, and we're talking about 200, 250 pips. I do still believe that we are going to find some buying interest, okay?
So do you think the 120 is a matter of time?
Yeah, I do believe that. We are 60 pips away, so my take is that if we have a slightly positive payroll on Friday, we will see it. And it won't take much more than that. But even if tomorrow the ECB somehow favors the greenback, the pair may disappoint markets, the dollar Japanese yen, I mean. It may remain subdued because it tends to wait for payrolls in ECB Thursdays. It tends to make disappointment movements for the market, usually, right? Of course, it can happen other way around, but it's the usual behavior for dollar Japanese yen.
But don't you think it's like too high, too much? I mean, this is the sixth positive move in a row. It's like 2008 pips.
Yeah.
Don't you see
Yeah.
any
Well,
big
the fact is that the
retracement?
pair has, yeah, I don't think much of that because it has been trapped in 500 pips for most of over more than the first half of the year, right?
Yes.
And if you take a look at the previous rally, we are still halfway of what the dollar Japanese yen can do in ways of monthly rallies, I was thinking about that specifically yesterday. Furthermore, if you take a look, we have sort of a flag in here. Okay, so the pair may attempt to repeat the length of this pull once it's broken. So we have a 130 as a probable technical target monthly basis, right? We are talking about 5-6 months more maybe, but and I don't usually trade at such, right? I don't trade at long term, but that's what the chart is saying right now. If you take a look at monthly, it has moved way too much too fast, but it had did it in the past also. Then we enter in a consolidative stage, and all of a sudden it wakes up and moves again. And what I can see right now is that there's no aims to stop the rally, right? We are having higher highs daily basis, so my take is still to the upside. Technically speaking, if payrolls are a big miss on Friday, then no upside. Okay.
Yes, yes, yes. And what is your thought on the Aussie? On the Aussie, the Australian dollar
What
is
I think
trading
about the
in
Aussie.
almost 4 years high, 4 years
Yeah,
low. It's trading.
yeah. I don't believe that the bearish rally in here is uh, it's really still strong, right? I was watching this area earlier this week because 8550 was the 50% retracement of the latest huge rally monthly basis and we started December below it. We made a pullback up through it to it, sorry. So I'm pretty bearish in this particular one. I was considering a few months ago that Governor Stevens, Reserve Bank of Australia Governor Stevens' target was the 85 level, right? So once we reach it, right, in here, market took a breath, took some profits out of the table, and we rallied 300 pips higher, right? But anyway, it was not enough to raise the dominant bearish trend. And since we broke below that 85 figure, and we have the bank, the central bank meeting this week early on Tuesday, right? And they said once again that they would love to have a lower Aussie. So I do expect. So meaning when fundamentals and technicals are both aligned, things seem easier for traders, I develop, right? It's not a matter of sell anywhere, but the bearish rally is there, the bearish trend is there. So I would rather sell on pullbacks higher or on a break lower, but I'm pretty bearish in this one. And I'm thinking about an 80, believe it or not, as a probable target. Again, if that continues to favor the greenback over the next 2 weeks. What I also consider important to remark these days is that we are in December. This is the last month of the year, right? So what we have in here is a bunch of first light data coming out in this first week, right? And I do believe that after that we will have another big week of action, market moving alongside with the trend and following this big news. And then will come profit taking, right? Books needs to be closed
rebalancing
for the year end. Yeah. So everyone will take their chances to close at the higher levels and with high profits. So I do expect that to trigger some pullbacks in dollars, right?
Yeah, so maybe a pullback in the dollar. Yeah, I know.
Yeah, in dollar. I don't know how long they will be. I don't know if they will last long, but I do expect those pullbacks and some quiet consolidation until, I don't know, January 10 or so, when the market starts to gear back and get back to life. So that's what I can see in the market these days. That's important, right? Those pullbacks, retracements, correction, whatever you want to call them, triggered by profit taking, those should not be considered as reversal or whatever. I believe that those will be just that, profit taking and booking for the year end, and that's it. Okay.
Okay, so we are like 2 minutes before the data.
Yeah.
Expectation is like at 220, 1,000 jobs. It will be the second biggest increase in the year.
It would be the second what? Sorry, I didn't hear you.
The second biggest.
The second largest. Okay.
Yeah, the second largest.
Yeah. Okay.
Yeah, according to the ADP, the US has created 2 million private jobs in this year. This is a pretty nice number. But I think it's not enough, no?
Yeah, I do agree. I was about to say that. It's a nice number. Numbers have been pretty nice all through the year, but I don't believe it's enough. At least not enough for the common people, who over the world, and I don't know, experts or analysts or however you want to call them, are cheering the dollar recovery, are cheering the end of quantitative easing and the strongest pace and whatever. But for the common people in the States, I don't believe it's so clear that they're back in track. That's what I'm trying to say. They're still
lost.
Yeah, they're still struggling to get a job. They are still dependent on unemployment. So I don't know. And the participation rate is still near record highs.
Yeah, it's a 70s.
Yeah, levels not seen in over 40 years. So, but again, what's really relevant is not what we think, common people thinks. It's about what market thinks about the numbers. So I don't know. Reading about the 221 expected today should give the dollar a short-term boost right now, right? But I would like to see Friday's payrolls number above 240. I'm not sure what the expectations are. 232. Okay, I would like to set there or
Okay,
above.
okay, we
Yeah,
got data is 2008, 208,000 pips,
208,000. Yeah,
lower than
below
expected.
expected. So the market's doing exactly the opposite, moving
Yeah, the
against
euro dollar
greenback.
is rising.
Yeah, the euro dollar is rising, and the dollar to percent is sticking lower. But really, I don't know if that was me, it was you, but really not significant at the time being. I would like to see what stocks are doing. Albania is still closed. Futures in the US barely reacted to the news. What can you see? Gold either. Oil is a big thing these days.
Well,
Okay, back.
not a really big move, and
What? Sorry, I didn't hear you right.
well, not a really big move. Well,
No,
maybe
not a
the
big.
maybe cable is doing better.
Yeah, because well, because its pound is in better shape on itself, right? We have some positive data coming from the K today, so uh, that's what helping the pair uh, right now. Still, I'm not seeing much of a market reaction to the news, uh, and seems the trend is overlapping the middle negative number
Yes.
of ADP.
Yeah,
We have
people are waiting for the ECB and the Northern Payrolls data.
yeah. Anyway, it's just sort of an advance, right? This
Yeah.
really
Okay, let me see if I
little
can
reaction,
see the report.
really little reaction in the forex market right now. As we were saying right below before the data, it's not enough. We
Yeah,
have
not
some
enough.
range. It's good. It's a good number, 200,000 new EOF a month, but it's not enough. Remembering when we have times of 10 or 20,000 new jobs, 200 seems good, but anyway, there it goes. Market moving against greenback. Uh, I would like to see if we reach it, how the market will behave when the euro dollar reaches 123.60 previous lows. I would expect some selling interest line in there, waiting to cap the rally. But let's see if it goes. Really not much of a reaction in there.
Yeah. And on even.
And not in stocks, not in commodities, anywhere. Commodity currencies are seeing some relief, but I don't see, as I was saying, much of an upside potentially. No, we'll see. And when it comes to Canadian dollar, I will be cautious right now because, as I said earlier, we have Bank of Canada rate decision and statement and speech and all together in about around 2 hours or so. Okay, there's no.
Returning to previous levels. Yeah, not even.
Yeah, seems we are not really. The market is not really interested in buying the euro at least at this point.
Stocks are pointing to open flat,
Yeah,
but not much story here.
yeah, stocks has been flat for long already,
Okay,
almost two
but
weeks.
why didn't tell us what is your expectation for the next 2 days, the next two big days?
Okay, those my expectations are just that expectations, educated guess, and by no means are the probable scenarios we're going to see, right? But
Yeah.
I do, yeah, just in case, just in case. I will tattoo a disclaimer in my forehead. So, but anyway,
A
I
disclaimer
will.
is always welcome.
Yeah, I will. We have one in my forehead, I would say. Anyway, I do believe that the ECB tomorrow will remain in wait and see mode. I don't expect them to add more easing as soon as tomorrow, as soon as it's December. The chances are higher if within this month we have more negative European data for January for 2015, but that's the most I can expect from the ECB. I do believe the ECB is happy with a lower euro. They need it. Okay, they need a lower euro to boost their economic growth. German index, it's a good example of that. DAX has reached 10,000 yesterday, boosted by a weaker euro that's favoring German exports. Sorry. So, uh, 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 despite I don't expect them to do much tomorrow, I don't expect them to favor it either, right? And if it does, if somehow it raises, I would expect that to be something temporal and more chance to sell than to start thinking about a probable bottom, right? So not much waiting coming from the ECB. And for payrolls, I do believe that we will be again in the 200, roughly 200, 220 price zone, a bit below expected. Once again, good, but not good again enough. And I don't see what the market may do with that. But if we don't have something below 200, something really disappointing, I don't see why the market would choose to sell the green. You know what I mean? Maybe we won't get it boosted right after the news, but I don't see it falling big either if the number misses by little. If it misses by far, then the profit taking I was talking about earlier may begin sooner than a couple of weeks as I was expecting. So those are my takes, and I'll be watching particularly that on the upcoming
Okay.
days.
So next time with you will be in the LAR tomorrow for the ECB
Uh,
coverage with Dave
yeah,
Peter. What
yeah.
time will be?
I don't know what time is. Let me see. On Thursday we have Bango at
Yeah, ECB
12:45.
at 12:30.
Okay, 12:30 GMT. 12:30 GMT. We
Yeah.
will start with the coverage and stay as long as Draghi has something to entertain the markets.
Okay.
And the same goes for Friday and the non-farm payrolls.
Yeah.
I do believe it's a bit later. It starts 13:15 the coverage, since the data is released around 13:30.
Yeah. Yes. Northern payroll is
1 hour later.
yeah, 1:50, 1:50 p.m.
Yeah.
GMT.
Yeah.
Okay, Valeria, thank you very much for your collaboration today. It has been a wonderful test. I think everything has doing smooth. And thank you.
Thank you. It's a pleasure as always. I love to be here talking.
Okay. Thank you everybody that has come to see us. See you tomorrow in the ECB coverage. Bye bye.
Thank you. Bye bye.